Good morning and welcome to the Forex Daily Update, brought to you by Pepperstone on Friday the 21st of December 2018. I'm Darren Sinden and you can follow me throughout the day on Twitter by using @ds_Pepperstone. Okay, as ever, we'll kick off with a look at the overnight changes and price moves to be aware of. But first, a bit of housekeeping. Please note we'll be taking a break from the daily update videos over Christmas, and we'll be returning with the videos from the 2nd of January. So this is the last video of 2018, but we'll see you on the other side on January the 2nd. Okay, then let's have a look at those changes, the moves of importance. Well, to be fair, a relatively quiet session yesterday. Or overnight, I should say, on the world's global foreign exchanges. We saw some big moves early in the London session, but they seem to have trailed off in Asia and early into the European session this morning. In terms of what moves we have seen, we can see the weekly traits, for example, here in the euro against the US dollar, the euro gaining 1.29%, the pound sterling also recovering some composure, adding 0.6% on the week to date against the US currency. A different story in Australasia, where over the course of the last week, the Australian dollar is down by 0.93%, and the New Zealand dollar off by 0.35%. Having said that, dollar index was weaker yesterday, and if you look at the moving context, we're down by more than 1% on the dollar index over the course of the week, trading around 96.43 shortly before we recorded the video, but of course it was considerably lower than that at certain points during yesterday's session. In terms of any other daily moves, none really of consequence. The rand, I suppose, the other standout, 0.4% to the good against the US dollar. And then on a weekly basis, something of a recovery in the cryptocurrencies. Bitcoin up by around 23.8% over the course of the last week, and Ether up by around 34.82%. Of course, it's still pretty ugly on a monthly and yearly basis for those two. Okay then, what's on the calendar? Events that may move the markets today. Well, we may be winding down towards Christmas, but there's certainly enough to keep our attention in the markets today. Shortly we'll have GfK consumer confidence out of Germany for the month of January, and then at 9:30 GMT we shall have UK GDP for the third quarter, and that'll be accompanied by public sector net borrowing requirements for the month of November. So a chance to look at the performance of the UK economy and government finances, which of course had been improving over the course of 2018. Then we take a break until 13:30 and we cross over the Atlantic for US GDP for the third quarter. And that's also followed by or with the release of personal consumption and expenditure data and core personal expenditures for Q3. At the same time, we shall have durable goods orders from the States, both ex and inclusive of transportation and defence, and that wasn't enough, gross domestic products and retail sales data out of Canada for the month of October. And then at 1500, a release of further core personal consumption data, personal spending, personal income data. So a real chance to look at the health and wealth of the US consumer in that data there. Okay then, breaking news and comment that's caught my eye overnight. First of all, US and Asian equities sold off again on a combination of trade fears and concerns about the possibility of a US government shutdown as of today. Japanese inflation eased in the month of November after 3 months of consecutive growth in the CPI index, and this is the latest in a series of mixed data from the world's fourth largest economy, giving the Bank of Japan and Shinzo Abe's government something of a headache. Staying in Japan, former Nissan CEO Carlos Ghosn has been rearrested on new charges around embezzlement. And back over in the US, the Defense Secretary Jim Mattis has resigned unexpectedly in protest at the US withdrawals from Syria and Afghanistan that were announced by President Trump earlier in the week. Okay then, food for thought, something to take away with you into the trading day and beyond. And why not think about this? The US may currently be negotiating on trade with China. However, it also faces a growing influence from Beijing in its own backyard, as China continues to invest heavily in Latin America. And this very interesting graphic here via G0 Media just shows what we're talking about. I'm not quite comparing apples with apples here because it's US foreign aid versus Chinese state investment that we're comparing, but nonetheless I think it serves to show just how much money China is prepared to pump into Latin America, a total of $145 billion invested across these 5 destinations, whilst if we compare the money that US has been sending there, it comes to just a paltry 5.5 billion. So that's something else for President Trump and his colleagues to consider, and I'm sure that's at the back of their mind when they're negotiating on trade. Okay, please take a moment to read this risk warning. Trading CFDs and foreign exchange on margin can be a risky business. If you're in any doubt about those risks or the suitability of leverage products for you, then please do contact your Pepperstone account representative, and do take a moment please to read this risk warning thoroughly. Thank you for your time. Have a great Christmas period, and I'll speak to you in the new year.